With its fancy name, the Supertrend indicator is practically begging to be backtested. And boy, its trend-following performance definitely doesn't disappoint. I'll explain how the Supertrend is calculated, then combine it with the triple exponential moving average to generate profits on the 4-hour dollar-yen.
The Supertrend indicator essentially determines trend direction and consists of a single line plotted over prices. The Supertrend is not available in MT4 by default, but the download link is in the description. The market is bullish when the Supertrend is plotted below prices, and bearish when it is above prices. The indicator flips above or below prices whenever a change in trend is detected. Here's how it's calculated. First, calculate the 10-period average true range. After obtaining the true range for each bar, get the ATR by applying a 10-period rolling average to the true range. Next, we calculate the initial upper and lower bands, which are offset from the median price by a multiple of the ATR. By default, a multiple of 3 is used. Notice in the chart above that the bands always move in the same direction. For example, when the band is below prices, the band only moves upwards or sideways, but never downwards. Using the initial band values, we arrive at the final band values in this manner. The final upper band value is the smaller of the current and previous initial upper band values, calculated in step 2. If the previous initial value is smaller, the band moves sideways. Likewise, the final lower band value is the larger of the current and the previous initial lower band values. If the previous initial value is larger, the band moves sideways. Finally, we choose which of the two bands to plot, since only one band is shown on the chart each time. If prices have closed above the final upper band, an uptrend is signaled. The final lower band should be plotted in this case. If prices have closed below the final lower band, a downtrend is signaled. The final upper band should be plotted in this case. This is how the Supertrend flips above or below prices whenever the trend changes direction. It reminds me of Wilder's parabolic SAR indicator, except that the bands do not accelerate towards prices. The easiest way to use the Supertrend is to buy when prices are above the band, and sell when prices are below the band. In a neatly trending market like this one, such a strategy would yield great returns. The problem is that markets don't trend often. Most of the time, you will suffer whipsaws like those below. The Supertrend tends to produce fewer whipsaw trades than, say, a moving average crossover strategy. Nonetheless, we need a way to improve the strategy's win rate. A major drawback of the Supertrend indicator is that a single long candle is likely to flip the trend direction. You may encounter an unfavorable news release, or an extended pullback in a long-term trend. These may not necessarily indicate a trend reversal. To filter out some of these premature entries, I'll add a momentum filter that contains a small time lag. For longs, I will wait for the 10-period triple exponential moving average, or TEMA, to cross above the 20-period TEMA. The TEMA cleverly manipulates the traditional EMA using this formula. This produces a smooth line without incurring significant lag. For another complete strategy that uses the TEMA together with the QQE indicator, check out the video at the top right. Let's get down to programming. The Supertrend condition has been pre-programmed, so just input the ATR lookback and multiple. Next is the TEMA crossover condition. If these entry conditions are met, I will place a stop order at the previous high, which will be valid for 1 bar. I normally wait 3 to 5 bars, but since we're on the 4-hour time frame, 1 bar will do. For trade management, a 150 pip stop loss and trailing stop will suffice. And that's it, no fancy secrets or tricks. For backtesting, I will choose the 4-hour dollar-yen, from January 2011 to December 2021. And voila, we have a good profit factor and return over drawdown. Perhaps the only downside would be the small sample of 135 trades over 11 years, which translates to about 1 trade per month. On the flip side, you can easily trade this strategy manually and keep your day job. Out of curiosity, I removed the TEMA filter and redid the backtest. Twice the number of trades, but also twice the drawdown, so it's a no-go. Hope you guys like the strategy, and do support the channel because it's hard work. For an easy way to construct a diversified portfolio, check out the video at the top right. For more trading strategies, check the video at the bottom.